The US-Canada trade war is heating up, and it all revolves around electric vehicles, EVs. Both nations see this sector as vital for their economic futures, but tensions have reached a boiling point. The Biden administration's Inflation Reduction Act, or IRA, offers substantial tax credits for EVs, but only if they're built with US-sourced batteries and minerals. This move was meant to boost domestic manufacturing, but it backfired. Canada, rich in critical minerals like lithium, cobalt, and nickel, viewed this as a direct threat to its economy. Ottawa accused the U.S. of violating the USMCA, claiming that the IRA's Buy American rules put Canadian automakers and miners at a disadvantage. In 2023, Canada retaliated. Prime Minister Justin Trudeau's government imposed a hefty 30% tariff on US-made EVs and internal combustion engine vehicles, targeting states crucial for the upcoming 2024 US elections. But that wasn't all. Canada leveraged its dominance in critical minerals by restricting exports to the US while simultaneously fast-tracking deals with the EU and Japan. To further complicate matters, Canada announced a massive $30 billion EV subsidy package, enticing automakers like Volkswagen and Stellantis to set up battery gigafactories in Ontario and Quebec. For U.S. automakers that rely on Canadian minerals and parts, this was a nightmare scenario. The fallout in the auto industry has been severe. Tesla had to halt production of its Cybertruck due to nickel shortages from Canadian mines. Ford delayed its $3.5 billion battery plant in Michigan, citing unreliable access to minerals. Meanwhile, GM faced a staggering 300% increase in battery costs after losing access to cheap Canadian graphite. Asian and European automakers like Toyota, Hyundai, and BMW are seizing this opportunity, expanding their supply chains outside of U.S. influence. For consumers, the impact is immediate and painful. EV prices have surged by 15 to 20% in the U.S. due to the scarcity of batteries and minerals. Gas-powered cars are also seeing price hikes as tariffs inflate costs for parts traded between the U.S. and Canada. The IRA's promise of a smooth, green transition is faltering, with EV adoption rates lagging behind targets by a staggering 40%. Geopolitically, this rift has handed a strategic advantage to rivals. China now supplies 65% of Canada's processed critical minerals, deepening its influence in North America. The EU has fast-tracked a trade deal with Canada, securing minerals for its own EV ambitions while sidelining U.S. firms. Meanwhile, Mexico is positioning itself as a neutral EV hub for Asian automakers, sensing an opportunity in the chaos. So, who's winning in this trade war? In the short term, Canada is losing auto jobs, but it may emerge stronger by diversifying its partnerships and securing its mineral dominance. China and the EU are benefiting from a divided North America, accelerating their control over green tech supply chains. U.S. automakers, on the other hand, are the clear losers. Ford and GM shares plummeted by 25% in the first quarter of 2024, while Tesla is losing market share to China's BYD. What does this mean for you? Expect higher car prices. Both ICE and EV costs are likely to remain elevated until at least 2026. Innovation is stalling, with budget EVs, like a $25,000 Tesla model, shelved indefinitely. Job instability looms, with 1.5 million auto sector jobs in the US and Canada at risk. And let's not forget the climate consequences. Slower EV adoption could derail emission reduction goals. The crisis has forced urgent negotiations. A proposed North American Critical Minerals Alliance, backed by Mexico, could revive USMCA unity, but the demands are steep. Canada wants the IRA's EV credits expanded to include Canadian-made components, while the US seeks guaranteed access to minerals. If these talks fail, the region could face a 10% GDP contraction by 2025, according to IMF projections, and a permanent loss of auto market share to Asia and Europe. This trade war isn't just about cars. It's about who controls the industries of the future. For consumers, the golden age of affordable EVs and stable prices may already be over. For policymakers, this is a wake-up call. Protectionism without regional coordination is a recipe for decline. As the US and Canada clash, the rest of the world isn't waiting. The question now is whether North America can salvage its partnership or if this economic crisis will redefine the continent's place in a fractured global order.